Welcome to E-mini Trade Along. Saul's going to be joining us shortly. Right now it's 9:17 a.m. on June 14th, 2023. Everything we do is for educational purposes only. Unless you're taking as direct trading or investment advice. If you are new to trading, we can help you get started. If you are an experienced trader, we can help you focus on making money based on a price action trading methodology. Key here is that Saul lays out key levels right around the cash open, and we work those levels through the morning session. If you have questions, pop into Zoom. Our Zoom access is eminitradealong.com. eminitradealong.com. We're here trading day slugging it out, looking to do 2, 3, 4, 5 trades. We're looking to bank on each trade 2 points plus. We have a defensive position based on our trades at 2 points. The 2 points can expand based on the action of price and what's happening in the marketplace based on momentum and follow through. You know, we have the ability for individuals to start out trading. We can provide you with an opportunity to have a trading platform. Trading charts. You can practice trade against real-time markets. In other words, real-time data. Then you can learn, and we can help you learn to become a better trader, a more consistently profitable trader, we hope, for you to be able to come out of simulation and into real-time trading against the market. We're looking for make $100, $200, $300, be able to drop that into your account on a consistent basis. That takes work and effort on your part. In a lot of cases, it takes work and effort on our part. We also have the ability for you to get set up to trade somebody else's money. There is a discipline, there's an opportunity, there are rules. We have the ability to help you pass. They call it a combine, where you need to be a disciplined, profitable trader for them to authorize you to trade their money. I think it's a great opportunity to be able to have a little bit more responsibility, if that makes any sense. Sometimes when we're trading our own money in our own account, we might get a little loose when it comes to some of the, I guess what I'm trying to say is sometimes our money is not as treasured as trying to pass a test to trade somebody else's money. Discipline, a roadmap, I think is key to this opportunity, and we can provide that to you. So the first level of service here is we have what we call a trade along. Saul is your host. He's a 25-year veteran of the trading pits in Chicago. We have Don, who is a great friend of Saul's and is Saul's wingman. That is in and out during the day. We have individuals that have been with Saul for a long time that certainly participate and are part of what we do here on a daily basis. So we thank them. We have new people coming in that are just kicking the tires, and we appreciate it. We've got individuals coming in as guests. I'll put up what I call the wheel of opportunity. Let me see if I can find that. Now, let's see if the discounts are still there. We got a discount on this portion, which is the trade along portion. Saul has his coaching, which he brings you into private class and teaches you in a private Zoom classroom from where you are. Let's say you're an experienced trader and just trying to get into consistent profitability, he can help you there. If you are let's see if I can grab this now. Oops. If you are a individual that is starting out and wants to get off on the right foot and use our experience and Saul's experience to get a kickstart in your trading, that's great. The trade along, you get Sol's key levels as a discipline for this morning's trade, a roadmap. Just put out the wheel of opportunity. So check it out. It's in the chat area. Self-descriptive. If you're a part of Sol's trade along and you'd like to take a coaching class with him, he's very generous with it. So hook yourself up. Hey, Babette, how are you? Bill? Hey, Dave, Dudley, Gus, James. Hey, John, how are you doing today? Mauricio, Ryan, everybody else, good morning. eminitradealong.com is the entry into Zoom. You can interact right with Sol. This isn't a chat room, if that makes any sense. It's more of a engagement with a trade along partner. It's really focused on helping you make money, developing consistency in your trading. Sol believes, and my humble opinion, I believe also, is that when Sol lays out that roadmap, he's first laying it out for himself as an advantage in his own trading. We also believe that it's an advantage in your trading if you learn how to utilize it properly. But I think as a witness to Sol's levels, when he gives them out shortly, write them down. It's going to be a pivot and other levels on top and bottom of that pivot. Write them down so that you can, I'm not going to say play along, but you can witness what's happening in and around Sol's levels and then ultimately decide if you think that's a trading advantage to you. When you're trading along with Sol, he loves questions, interaction. He likes to be part of it when it comes to helping individual traders. He's able to walk and chew gum at the same time, which is pretty rare. He gets to know you, you get to know him. If you do end up taking a class with him, a coaching session, then you get to know him real well, and then there's a interaction back and forth with him, which I think is good. If you do take a class with him, when you come into the service, it's really a proving ground of what you just learned. You can apply it and then interact with him based on that application, which I think is great. Your questions are good questions because there's no bad questions. As we develop out, we can break out into the ability for you to use a microphone to ask questions and interact after the 11:30. I think we'll start that at 11, depending on the trading day. We may start it at 11:30. We shut this down. In other words, we're looking to be finished our trading, have banked our money for the day, and then our focus is, as Sol will tell you, the morning session. Morning session is the area of interest here. We're looking to do 2, 3, 4, 5 trades. If you do 1 or 2 trades well, stop trading. Have banked your money, stop trading. The concept here is how to bank money into your account and hold on to it. Then come back and do it again tomorrow based on a disciplined approach to trading during the market session, first 2 hours of the day. Like right now, it's 9:26. Sol's going to be taking over shortly. The opening bell in New York's going to happen. There's going to be a flush of activity. We don't know what that flush of activity is going to be. It could be a robust momentum and follow-through day. It could be a quiet day. There could be some anticipated economic releases or things going on in the background that you have to be wary of. So every day is different. Every personality is different. Sol's levels, when he gives them out, could quite possibly be different from yesterday. Every day is fresh. The opportunity to make money is there. So strap yourself in. Don't hesitate to ask questions. If you like what we're doing here, tell your friends. E-mini, tradealong.com. E-mini, tradealong.com. If you hear about us, come in. Kick the tires. Take advantage of our discounts. Keep the lights on. That's right, John. And so I'll go through all that. I mean, he's his own, he's the talent here. He's the one that spent 25 years on the floor, slugging it out, in my opinion, up against the best traders in the world. He has a trading technique that he survived on the trading floor. He was one of the pretty big player in the bond pit when you couldn't shoehorn another person in that bond pit when it was at its peak. And he is now utilizing the electronic world, utilizing those techniques. And the feedback's been great. So we appreciate it. Thank you. Try to sweep away all the noise, all the things you're looking at, all the distractions, all the TV. Just focus on making money, price action trading, key mapped out levels, the entries, exits, and stops. And check out the wheel of opportunity.
All right, good morning, everybody. Can everybody hear me all right?
Yep, you're good.
All right, let's give you our levels for this morning. Our pivot this morning is 44.20. 44.20. Resistance above at 28.35. 44. 52 and 60. Support below at 13.04. 43.96. 88 and 81. $13.04. 36.96. 88, 81. Resistance on the upside at 28, 35, 44, 52, and 60. All right, we had PPI number come out this morning. PPI number obviously is the wholesale inflation numbers. The headline number was coming out, was expecting minus 0.1, came out at minus 0.3. Year to year, expecting 1.5, came out at 1.1. All of those bode well for interest rates, at least almost would think that you would probably keep interest rates steady this afternoon. The core, though, PPI, we're expecting plus 0.2, came out at plus 0.2, and year to year was 2.9. They were expecting, came out at 2.8. So it was a little bit better, but the core is still kind of holding steady. As we drift down here a little bit, we got support down here at the 13 area. Again, we're a big 1,000 lot there at 15. Look at that. Let's see if they take that out. Oh, they took it right out. Not even like a breather there. Well, it would have been nice to go down to 14 and then pop. Somebody took that 1,000 lot right out, and so somebody bought them, somebody sold them. So remember, futures trading is, for the most part, zero-sum game, right? So somebody wins, somebody loses. For the most part, I'd say probably 95%. The other 5% is probably, hedging against some of these big, institutions or whoever hedges their portfolios. So we'll see. Let's see what we do here. All right. So again, welcome some of the new folks that are here. We are trading mini S&Ps. We're looking for opportunities to scalp the market based on the levels we just gave out, in addition to any price action opportunities that might occur. With the volatility right now, we're probably looking at, again, going back to maybe 2 or 3 point stops, and maybe you could do 3 points to 4 points, depending on if we start moving around here a little bit. But the FOMC is going to be later on this afternoon as we come down here and test our 13 area. And remember, it's an area, so we're scaling around, right? We're not going to just be perfect all the time. So there's got to be a little bit of scaling, and we had a nice little rotation here. If you got in there at 14, first end of our scale, depending on how you scale, right? Everybody scales. And if you were just trading your one lot and you had 13, that's fine also, but we did not get down there. But we have a nice little rotation here against the 13 area. And nice little pop up here. And we're still on the same bar, so a nice little quick trade here for us right off the morning. We average, and the key word here is average, and we're getting a nice rotation here. Again, you're scaling out of any extra contracts that you have. Everybody trades differently here, so if you have 13, obviously you didn't get filled, but we scale around it. If you've been with us for a while, this is how we manage our trades here a little bit. We scale around an area, and that's why we give you these levels. They're areas that we always consider them, and this is one of the reasons why, because we're not going to be perfect. But the level did work. If you look at the chat, you'll see those are the levels that we're going to use as a guide to the day. And remember, today is FOMC, a little F day today, and we don't like F days because we don't like to get F'd on F days. So we stay away from that late afternoon trade because it's just not our cup of tea, or at least not mine for sure. I mean, anyway, we trade in the morning, but hopefully you made a little bit of money and let the algos and the HFTs have their fun later this afternoon. The VIX holding steady at a 14 handle. Well, I guess that's pretty low, as far as VIX is concerned. VIX is a volatility index. Sure, no problem. I can explain now. We give those levels out that you see. Those are support and resistance areas. Support areas are buying opportunities, and resistance areas are selling opportunities. There they are again. We don't believe markets go straight up or straight down. Consequently, we're looking for opportunities to take advantage of the ebbs and flows of the market. So we are kind of buying support areas and selling resistance areas, and using our stops to protect ourselves. And we're looking at our stops right now. I said about 2 to 3 points on our stops, 2 or 3 points. So each point is worth about $50. And so we're risking about $100, $150, depending on your risk tolerance. So, and it also depends on how many contracts you trade. And I like to scale into those areas. Like I said earlier, we're not going to be perfect. So I like to scale in a half a point above and below the level. So I would be in at 14, 13, 12. And again, if you're only trading one lots, then you're finding an area that you're trading. Got to find a level, even though the support level there is 13. Maybe you're more risk averse. You're going to take the 12 area underneath. Maybe you're going to take 13 straight up. Maybe you're going to take 14, depending on, again, what your risk tolerances are. And everybody here has different risk tolerances. My orders are in place already against those areas that we've given you, those levels that you see. So I scale in around those areas and try to, buy support levels and sell resistance areas, and then scale out of my position when the market gives us a rotation. That makes sense? No, we are not going to be waiting for confirmation, because if we wait for confirmation, we're going to miss the trade, basically. If the market goes back up to 20, like it did here, it went up to 19. At what point are you going to say, okay, I'm going to buy the 13? Yeah, I mean, it's already gone, right? So we protect ourselves with our stops underneath. So if we're buying the 13, then my stop is automatically in it, so I don't get run over in case the market flushes through it. But I'm looking for those opportunities to take advantage of the ebbs and flows. So if you I mean, my thing is it's hard to get confirmation because the confirmation is the levels. We put the work into finding those levels. I'm on a 5-minute chart. I have a 5-minute chart. My charts from right to left are 5-minute ES chart, a 60-minute ES chart, and a 5-minute 30-year bond chart. So yeah, so we are protecting ourselves with our stop in case we get run over on an area, but the confirmation there is the levels. We believe in the levels, and we understand why we put them in there, and we again, you have to have confidence in the work that you do so that you can put your levels in there and then trade off of those areas. We do have a coaching class or education course here, which helps us or helps any individual who wants to learn how we do our methodology to help us find these areas. And if you're with us for a while, you'll see if they work or not, or you can ask some other people in the room if they work or not, if you're new here. All right, we have a nice little quick bag. Now, there's in addition to the price action opportunities. The levels, I should say, there are price action opportunities that are occurring. And those are also for traders who want to take a little bit more risk and want to kind of use the ebbs and flows of the market based on the opportunities that might present themselves using the methodology that we teach. Am I taking? No, I'm looking at the 5-minute chart. Basing the levels are based on the work that we do, whether it's a 5-minute chart, an hourly chart, a weekly chart. I kind of go back and find areas on those. But then I use the 5-minute chart to give us our price action opportunities. No, like I said, my orders are already placed, whether they buy or whether they're buy orders or sell orders. So they're already in the queue. I like that word, in the queue. Anyway, they're already in place, so I like my upside resistance up at 28. I've got 27, 28, and then 29 above it, just a little. So those are where my orders are in place against 28 to sell. Now, because we got down to 13 and change, the 13 area there is pretty much got it worked technically, right? Due to the fact that we did touch the 30. We might have not got 13, but we got 1375, and our area got triggered. So going back down there, and when it goes back down to 13, I would say that the level already got triggered, and I would be very hesitant to have that order in at 13 if you didn't get filled. So I would have to cancel that if I was trading in the 13 area and just had 13 straight up, because technically it worked. As we come back up here to our pivot area. So we do numbers this morning. Obviously the big number is going to be the FOMC, but again, that's kind of muted to some extent, only because I think there's the idea of what they're going to do is probably pretty much in the books, I think. They're not going to be raising, especially with these numbers that are pretty decent as far as inflation numbers are concerned. Nice little bit of a rotation here against our pivot area. Again, first rotation against the pivot off of a high or a low of a level is a little trade for some of those of you who are a little bit more aggressive. All right, let's see here. What do we have as far as so? PPI came out at the top at 9 o'clock. We've got Atlanta Fed business inflation expectation announcement. So that's at 9 o'clock. We like to be flat when numbers are released. So just FYI. And then later on this afternoon at 1 o'clock, obviously the FOMC announcement, and then followed by his presser. So you have one jolt of activity when the announcement is released, and then you're going to have another jolt of activity. Nothing like having live comments being made by the Fed governor to make the markets move around, because if he sneezes or if he pauses at the wrong place, everybody's going to assume that he's saying something, and maybe he's saying something that he's not saying. And then all of a sudden you're like, oh, wow, well, this means we're going to rally. This means we're going to break. The best thing to do, I would say, because I've been there and I've traded FOMC, and just not to trade it. Like I said, it's just probably better just to watch if you're going to trade at all. When you have fundamental news that is going to affect the market, it outweighs the technical analysis that you do. So since we trade technically here, when you have an inflection of fundamental news like PPI or unemployment or any other number that might come out, the initial rotation will kind of overtake the technical analysis that you do. So you have to be mindful of that, and understand that if you're going to be trading when big numbers are released, you're going to get some volatility probably that is unwanted, and really it's hard to trade as a trader. And we are traders here, and we're not using algorithms, or we're not using any HFTs. We're just trading lonely old traders here with hand on a mouse and a platform in front of us, and we're clicking away. So to be able to work as fast as those algorithms is not worth the aggravation. So just there's always going to be trade tomorrow, so you have to just be patient. All right, we had a nice little rotation here off of our 13 area on the downside, then pop back up here to our pivot earlier, and then we had a little bit of a rotation against that. And now we're just kind of neutral here. It could easily continue to go rally up to the 28 area, or we could go back down. So I have no position right now, kind of flat. See what it wants to do. So Atlanta Fed coming out here at 9 o'clock, top of the hour, about 15 minutes. And then later on, you have the Fed stuff. With the Federal Reserve widely expected to keep its key interest rates unchanged today, which stands at 5 to 5.25%. Following 10 consecutive hikes, investors will focus on the central bank statement or any inkling of guidance and about its intention in the July meeting. At the last gathering, the FOMC kept the door open for rate increases at future meetings, when it said additional policy firming may be appropriate to return to 2% over time. All right, as we continue to uptick here a little bit bullish here if we hold the 20 area. So if we hold the 20 area, a little bit bullish. So again, the key at 1 o'clock when they release the statement is how the statement changes. Any changes. So again, it says that additional policy firming may be appropriate to return to inflation. So if that statement changes, then you're going to have a move one way or the other. Any changes to the wording will let the market know which way the Fed may be leaning towards another skip, which is what they're doing. They're skipping any rate hikes to assess data and towards resuming a path of tightening. If the FOMC keeps rates unchanged at 1 o'clock, look to see if any of the members vote to raise rates this month, which can give insight into the debate that occurred at the meeting. Fed policy also provide their expectation for inflation, growth, unemployment, and where to see rates going over the next couple of years in a summary of economic projections. In March, the central bank median projection was 5.1% at the end of 23, unchanged for December 22 meeting, while the median projection for 24 year end was 4.3%, up from 4.1 in the dot plot. So, again, like I said, they do shell out a whole bunch of information. Yes, we're trading the September contract right now. They turned over the September contract on Thursday, and we went over on Monday. Again, a little bit bullish here. If you're trading here, anything below 20, you want to be out of any longs. If you are so inclined, or looking at the 28 at some resistance. All right, so let's see. So we're continuing to uptick here. Again, we're a little bit bullish here. If you are trading, give you a stop there below the 20. If you're looking, and then the target there would be 28, but only if you're a little aggressive. Let's see. Mixed economic signals have made the Federal Reserve's job much more difficult, especially after the headline CPI number for May came in softer than expected. The labor market continued to show resilience, with unemployment rate at 3.7%, hovering near 50-year lows. 339 net jobs created in April. Additionally, job vacancies rates have increased, with more than 1.5 jobs available for every unemployed person, and consumer confidence numbers have increased in 8 of the last 10 months. Unfortunately, overall GDP growth has slowed from the previous 2 quarters. However, the annualized rate of 1.6% is higher than what has been seen the last quarter of 22. So they jumble all these numbers. Again, we're a little bit bullish, looking for the 28 here. Like I said, gave you an exit strategy below the 20. So if you're looking to buy them there, we have an out. And we're looking at target there at the 27 area. Yeah, we're upticking here a little bit. If you're a little bit long, you're looking for the 27 area as an exit strategy. So they take all these numbers into this big equation and they come out with their big decision. That's what they do. Right? That's what they do. So we'll see what happens. Yeah, our next level of resistance is up at 28. We'll repeat the levels again in the chat. You'll see them here in a minute. Those are levels we're looking for, support and resistance areas. I can see our first resistance area is up there at the 28 area. And remember, I said it's an area, right? So keep that in mind. Just like the downside, we got down to 13 and change. We didn't get down to 13, but the level kind of technically worked there as the 13 area. So we go back down and retest that 13. I would not be getting long there. I would look at the next level there, which says 4. Yeah, depending on how risk averse you are. Now, remember, because the FOMC is going to be released later on, and we had the PPI number come out, be a little bit careful as far as how much activity is going to really happen. They're going to trade off of the FOMC. We'll see what this 9 o'clock number does. Again, we like to be flat when the numbers are released. So, if you are long, you just keep that in mind. So the number's going to be out here in about 7 minutes. Again, if anybody has any questions, feel free to ask in the chat. Welcome to some of the new folks that are here. We're trading mini S&Ps. We're looking for opportunities to scalp the market. We're looking at about 2 or 3 points on our trades here. And we're trying to take advantage of ebbs and flows of the market. We don't believe markets go straight up or straight down. Obviously, when there's fundamental news that could create some volatility, you have to be mindful of that. Obviously, later on this afternoon, the FOMC is going to be releasing its information as far as interest rates that could kind of quash any movement as far as technicals are concerned, because fundamentals override technicals when they're first released. So we like to stay away from trading that FOMC stuff. It's an F day, and we do not want to get F'd on an F day. That's my theory. All right. Okay, we're just kind of, range boundish here. As you can see, overnight, that's where they were at. They kind of just drifted right back into that range. We're looking at 28, got up to 26 there. I mean, just missing it. I mean, why didn't it go up to 27? I don't know. Why can't you jump?